is it the end of capital growth, and how fast are house prices going to increase in the future in New Zealand? Now, here in New Zealand right now, house prices are falling. Over the last 3 years, we've seen house prices increase a massive 55% and then drop back just under 10%. Now, this is causing some people to ask, is this it? Is this the end of capital growth? And in fact, some commentators are coming out saying, you know what? House price growth might not be the same in the future as it has been in the past. But are they right? Well, that's what we're going to figure out in today's video. And we're going to go through 3 views from different economists and commentators on the property market. We're going to start with Infometrics, a local data firm. Then we're going to look at the Reserve Bank, see what they think. And then we're going to look at a couple of alternative views. And I think some of these may surprise you. So let's start with Infometrics. Over the last 30 years, house prices have increased substantially here in New Zealand. In fact, they are 8 times higher today than they were 30 years ago. That's an average of 7% increase every single year. So property prices have doubled roughly every 10 years. Now, what does that actually mean in practice for you as an investor? Well, let's say you bought this house for $125K in 1992, 30 years ago, and it followed the rest of the market exactly. Today, it'd be worth $1 million. So if you bought that property 30 years ago, you as an investor would have made $875K in capital gains. But you might think, well, how long can that sort of growth continue? Well, that's the reason why there have been some slightly frightening headlines, reports, and speeches that have come out recently. So let's talk about that Infometrics report, because they did recently release a report into housing affordability. Now, in that report, they said that between 2021 and 2046, their baseline forecast includes an average house price growth of 3.1% per year. Now let's get past those percentages and talk about what that actually means for you in dollar terms. Well, over the last 25 years, property prices have increased 5.2 times. Now, if over the next 25 years, prices followed exactly what Infometrics are suggesting, then that increase only 2.1 times. Now again, that might sound scary, but what does that mean for you in dollar terms? Well, let's say that you purchased an $800,000 townhouse in Auckland today. Well, if you held that for 25 years and the market followed what Infometrics are saying, by the year 2047, it'd be worth $1.7 million. That's a $916,000 increase. Now, that's really good. That's the equivalent of stashing $705 a week under your mattress. And it's especially good considering that you're not spending $800,000 of your own cash to buy this property. You're probably borrowing that from the bank, and then most of that is going to be paid by the tenant you're going to put into that rental. So although Infometrics forecast might cause some pretty scary headlines, there's actually no argument about whether house prices are going to increase in the future. The only question is about at what rate is that going to happen? And it is important to note that under these forecasts, they've only got household income being predicted to grow at about 3% per year, whereas historically, it's been around 4% according to the Ministry of Business Innovation and Employment data. So I do think that these capital growth forecasts are on the optimistically low side. Okay, let's talk about what the Reserve Bank thinks is going to happen. The chief economist at the Reserve Bank, Paul Conway, recently gave a speech to the National Property Conference, which caused these pretty scary headlines, like this one that said the tide may well have turned against housing. In fact, he even gave an interview with the TV show Q&A that came out with these pretty scary intros.
The Reserve Bank's new chief economist will tell us why he reckons property investments are no longer safe as houses.
But when you actually hear what the economist said, it gets a lot more nuanced. Here's the first clip from that interview.
Add all that up, and it's just not clear to us that the housing market is going to be that one-way bet that it has been for Kiwis over the last few decades.
And actually, I'd agree with him, but I'd go even further by saying that housing has never been a one-way bet like he's implying that it has been. In fact, no investment is ever a one-way bet, and perhaps only housing looks like it has been when you look back at the data in hindsight. Now, does that mean that investors aren't going to make any money and that it's the end of capital growth? Well, let's look at clip number 2 from that interview.
People will still make money out of the housing market. There's housing investors and landlords that are very good at what they do, and they'll continue to get a return out of the housing market. But I just don't think it's going to be as sure a bet as what it's been for some of the other people in there.
Now, what's he saying here? People will still make money in property investment, but you might have to be more strategic in how you do it. You can't just buy anything and think you'll do okay. You will have to be more careful. And you know what? I agree with him here too. But one criticism of that speech that I'd give is that it is based on current immigration and tax settings, and those continuing right into the future. In fact, here's our final clip from the chief economist.
So if some of those fundamental drivers of the housing market change back in the other direction in future for whatever reason, then all bets are off. I could well be wrong.
Now, one of the fundamental drivers he's talking about there is the tax system, but it's unlikely that the tax system is going to stay unchanged for the next 25 years. In fact, the government is likely to change at some point, and it's not always going to be the case that rules like an extended bright line test or current interest deductibility rules, it's unlikely those are always going to be around. In fact, an ascendant National Party under Christopher Luxon is vowing to change those tax rules for property investors back to what they were. Now, that could add oomph back into the property market. So is it the end of capital growth? No. Even if you look at the most conservative people, nobody's suggesting that it's the end of house price increases. There's just an argument about, well, what rate is it going to be? Okay, let's look at an alternative view and hear from a couple of other economists and look at our specific house price forecasts too. But just before we do that, if you liked this video, don't forget to hit the like and subscribe button and toggle that little bell so you get notified and don't miss out on our future videos. Okay, let's get into these forecasts because not everyone takes an ultra-conservative view of the future of the housing market in New Zealand. In fact, Tony Alexander, an independent economist who we call Papa T on this YouTube channel, he recently penned an article for One Roof with the title, "Don't Rule Out House Price Rises at the End of All This Gloom." Now, in it, he said that one of the things people like to say about the residential property market is that such and such thing will happen, then this other thing will happen, and after that, things will flatten out, hold reasonably steady perhaps for a few years. And by that, he means that people tend to take an optimistic view that house prices will settle. They look at what they want the housing market to do rather than what it's actually going to do in practice. But he says, in his experience, periods of nothing much happening are pretty rare. There's always something to write about and opportunities for the canny to find. Now, the housing market doesn't care what you want it to do or what I want it to do. It'll do what it does. But what will remain the same is that canny property investors can find opportunities to do well and build their wealth. Now, although I do think that Infometrics forecasts are on the more conservative side, here at Opus Partners, we never actually bank on the fact that house prices will increase in the future at the same rate as it has been in the past. We do take a more conservative approach. So while over the last 30 years, Auckland house prices have increased 7.6% per year, I'd recommend you only use 6% when you're doing your own modelling. Knock off 1.6%. Now, what does that mean in practice? Let's say you bought a 760k townhouse in Auckland today. Well, over a 15-year period, by the time we get to 2037, I'd only say it's worth 1.8 mil and you'd make about 1.1 out of that. Bearing in mind that inflation and household incomes are constantly increasing over this period too. Now, if you're investing outside of Auckland, well, house prices have increased by 6.7% per year over the last 30 years. So I'd recommend knocking off again about 1.5%, take it down to 5% when you're running your own numbers. So let's say you're investing in this standalone property in Canterbury, you buy it for 775k, 15 years, forecast it to be worth about 1.6 mil, that's an $836,000 increase. But you might think, well, what if you're wrong? Well, look, I will be. No one gets house price forecasts completely right, but you've got to have some basis for making your financial decisions. But you know what, let's say that Infometrics are right, the most conservative view, and that house prices only going to increase 3.1% per year over the next 25 years. Again, I'd still be investing at this rate, because if you were to buy that 800k townhouse and you forecast what it's going to be worth over 25 years, it's the equivalent of stashing $705 a week under your mattress. And realistically, how many of us are actually doing that? I'm not. Now, if you do want to invest in property, then you might like to check out this video. This is going to teach you where the best places to invest in Auckland are right now.